today we are finally here at San Francisco. We visited the SOSV IndieBio, and then we met the Paul.
Yeah, my name is BRONSON. I'm the managing director of the IndieBio San Francisco office at the SOSV, where I'm also a general partner. In San Francisco, we have, for 11 years, been investing in about 20 startups a year on what most would call an accelerator model. You know, like kind of like KIC, like, you know, first check and deep tech is what we call ourselves. And we are, most of the time, that's true, that we're the first check in. And we do radical technologies that intersect. If founders out there are meeting VCs and they feel like nobody understands us, that's probably the exact sort of thing that we do.
Yeah.
We were the first in the world to start funding biotech companies 11 years ago with very small checks because we had already built all the labs they would need, and they're here on the other side of the world. And it meant you could have a smaller investment size into a company, and we could accomplish more with small investment to de-risk it. Since then, we've gone on to do about 200 companies. Our portfolio is worth about $8 billion at this time, and we continue to relentlessly look for investments that are perhaps too radical, too different, too weird for a normal VC community.
Say hello. I just coming from the Tokyo this morning, and then it's very honored to be here together. And then we would like to spotlight on how these companies and categories do here, and then what kind of the US trend is changing now. So yeah, we want to focus on that here.
Then following your explanation of SOSV, I think you guys said your investment strategy sounds like focusing on the deep tech area.
Mm-hmm. That's correct.
But for me, in Korea, the Korean investment accelerator also trying to invest in the deep tech area.
Yeah.
As an early stage investor, sometimes I feel that investing in the deep tech area is an accelerator.
Yeah.
It's kind of difficult part.
Yeah.
Because it takes a long time, need a lot of money. So how about there's no difficulty you investing in the deep tech area as SOSV?
No, you stated it correct. That I think it goes back even further. Go back to when Facebook, you know, had 1 billion users, but still hadn't made a single dollar of revenue.
Yeah.
And then it suddenly made a lot of money. People began to understand, oh, some companies use it to put a whole bunch of money in, and then later they're going to make money. And that affected all sectors, and that kind of created deep tech. Deep tech is synonymous with companies that you have to get through like a Series B or C before you see any revenue, let alone return.
Yeah.
And that's what the world meant by deep tech. I think today's AI companies are getting the revenue much faster, and you're seeing that that doesn't have to be the only way you do deep tech. We've been doing deep tech for 11 years here, but it was literally in 2020 that we made an aggressive investment pivot change. We only wanted to invest in the deep tech companies that we thought could get to revenue a lot faster. And we are requiring almost all of our companies to get into some form of revenue, or at least brokered a big deal at pre-seed. And I have pre-seed companies now with $8 million in revenue, right? And pre-seed, and it's because you choose them for that reason. And so what does that mean we don't do? So some big areas of deep tech that are really famously like need another $50 billion before anyone can make a penny off it. Nuclear. Yeah. So we don't do nuclear here because we don't know when that's going to return money. Quantum computing. We don't do quantum computing because, again, we don't know how much money has to go in before we'll see a return. Those are other investment classes. Those are really big bets. We look for sort of lesser understood intersections of technology where we can actually get to revenue fast, and then we can actually get out of venture capital and get into traditional capital because it's cheap. Traditional capital is cheaper. So we're doing a form of deep tech where we only invest in things that we think can get to revenue.
Okay, but it sounds like you're focusing on the data deep tech.
Right? That's what it sounds like, right? Does that mean we don't invest in stuff really deep? I would disagree. Like I would say that many of our companies are the most sophisticated in the field in the world. Some of them are so sophisticated there isn't another investor in the world that can even diligence them. But they have revenues. So then a normal investor can understand that.
Thank you for the answering, but I would like to ask some more deeper questions, comparing to the Asian situations. Usually when we describe the deep tech investment, it's just something like take a longer time because of two things. Because for the deep tech, it's bridging the some commercialized phase, take a lot of time to R&D phase, and also require some of the capex. But at the same time, the market is still not open yet there. So those two things has a very let the investor hesitate to invest into deep tech in Asia market usually. But you say that now these days all the deep tech seems like making the very fast revenue stage. They can reach out.
Good question, but let me clarify. No, I'm not describing the American deep tech market as doing what SOSV does. I'm describing just what SOSV does inside the larger market. So it's true that that the Korean deep tech is actually normal for deep tech even in the global markets here in Silicon Valley. It's just what we invest in. We invest in the rare company. Now, I would actually say we take more technical risk than other people, because it often means a whole new platform being with much cheaper capex that can go faster, but it's even less proven. So we take that additional technical risk. But if it works, we get a company that solves things with lower capex, higher margin, faster revenue. And we use our ability to diligence and bet on really novel technologies that no one has seen before.
In this case, can you introduce some of your best case related to your criteria, some startup you recently invest or your best performance company?
Yeah, let me go get a prop, and then I'll kind of talk about two of them. One area that we still invest in when many others are scared of it is the agri-food system, and including agriculture.
Agriculture, okay.
And that normally people wouldn't say, oh, that's a great place to invest. Like, it's not, because crops grow slowly and they're seasonal. You can only grow once a year. So it's like to an investor, it looks like a terrible market. I'll mention two companies I have. One of my companies is a Korean company. It's called SOSV's.
SOSV's?
Yeah, and they have discovered, no one in the world knew this existed. They have a way to take a little tiny solar panel, and it also has a battery in it, and then it takes that visible spectrum and it turns it into far infrared spectrum. Far infrared is a little more energetic than radio. Radio is how our cell phones compete with towers. Far infrared also goes through buildings. Nothing seems to notice far infrared except for plants, and that plants are affected by the far infrared and they grow 30% better.
Better and faster?
Better and faster.
Okay.
And so we have a very cheap device. It sits in a greenhouse or in a field, such as a rice field.
Relating to smart farm or
with any farm.
Okay.
Doesn't have to be a smart farm, because it's a very inexpensive device. It's literally operating. No one in the world knows how to emit far infrared at a distance. We can emit it 50 meters, 75 meters, 100 meters. The most people have done with far infrared is maybe a few inches. So it's the first one in its world to have a microchip that can send it 100 meters. And so it's an electronics device. And no one in the world understood that actually this far infrared spectrum could impact plants that way. And so it's shocking, right?
Okay.
Here's another one. Here's a company where these little tablets, these black circular tablets, if you were to fertilize a field of cotton, let's say it was 1 hectare of cotton, you'd normally need 500 pounds of fertilizer. So you'd need as much fertilizer as the weight of all three of our bodies, right? It's a lot. It's about the size of a dishwasher. You can replace it with a single tablet. And I can sell the tablet for way less than the cost of fertilizer. And we have over 90% margin on the product. And it's emissions free. So it solves all of the world's agricultural emissions problems. So again, cheaper, better, logistics are easier, emissions free, all the same ones. The scientists who worked on this used to work on satellites, and we use a machine of our own design that we make, and it's a physics-based machine. I won't disclose the actual technology, but no one in the world has seen a product like this ever. And this will literally rewrite 200 years of fertilizer. Fertilizer is a $600 billion market.
Okay.
Right?
Huge.
And I have better margins than software in a product like this. So it's an example of, an intersection of the physics of manufacturing with the biology of agriculture, with the economics of financial mindset to wire a specific company. Companies like this are very hard to find. So it means we have to say no to tons and tons of companies.
Yeah.
Right? But luckily we have founders from 50 different countries.
Okay.
Yeah. And because we are looking for just brilliance, we aren't looking for someone to fit our mold. 45% of our companies are led by female founders.
Okay.
So we actually have a higher female founder rate than almost any fund in the world, just because we're open to scientists. So it's not like every deep tech company is like this, but the ones we look for are like this.
So this one.
So this single tablet,
This company name, Newtipik?
company's called
Minerals.
Farm Minerals,
Farm and okay.
and this single
Fertilizing.
tablet is enough for an entire hectare of wheat.
Super
or-
fertilizing, spreading things.
So higher margin than software.
Regarding of the farm minerals, so from my point of view, it seems like just get rid of the deep tech or that kind of vocabulary, and then very simply, I feel like you just start from the market fit researching first. So how the big market's there, and then what kind of the core problems on theirs, and then it seems like you redesign how some of the founders were sort of solving these big markets problems. That is my understanding from this case.
Yeah.
So isn't there any specific your approach to the finding the founders, or what kind of procedures or uniqueness of the SOSV, or some of the part you can helping out to founders to reaching to the market fit programs and solutions?
It's a great question, because turning a scientist's ideas combined with, and they often don't come from the market. They don't have founder market fit. My founder here, these were physicists. They used to work on satellites. They don't know anything about farming.
Yeah.
They didn't know anything. I had to teach them everything about farming, right? But you had to teach them how farmers think. Same thing with food companies, chemical companies. You have to teach them how that market thinks. And that is different, because it is better and easier if you hire someone and you had a CEO from that industry, because they already know how they think, right? But backing scientifically minded founders does mean we were really training them on that. But it also gives us a chance to really invent the business itself, invent the application itself, how to go about attacking that market. We look at markets where we are looking for weak points, strangleholds, where are they feeling friction. If you officially talk to a market, they'll say, we have no problems, we're doing great, right? But you have to find the pain points, and you have to design companies that go straight after the pain point. And if you can answer that pain point for them, you can get a lot of big customers very fast. This requires, a lot of it is trust. We are talking to the world's leading corporations every day to understand where their real pain points lie, what problems are out there. And then we're looking at all manner of companies that come through. We're unique. When we fund a company, it is 75% of the time, it is not to do the thing they applied to us to do. We are positioning them, steering them, shifting them in an important way. They had ideas about how they were going to go into a market, but they listened to us and we try to help fix it from the beginning. Deep tech is not like software. In software, you can pivot for very cheap. You can think you're doing this and then you do some user tests, it doesn't work. You come up with something new over the weekend and be at it the next week. In deep tech, you know, people do work. They work 9 years in the lab on something, then they come to us, right? And you can't just turn on a dime and fix it. So getting it right in the beginning becomes more important. Knowing and having good instincts for where that product market fit is going to be is more important. Working with really experienced investors that know these markets becomes more important.
You introduced your two companies related to the agri-tech company.
Yeah.
It's common things like they have the product where some sounds like me more tangible business thing. But nowadays I want to go jump to the AI sector.
Yeah.
You know, the San Francisco regulatory AI is booming up.
Yeah.
Every money, every venture money is going to the AI side.
70%.
Yeah, 70%.
Yeah.
But very the big companies, everyone is related to some real software thing. But I think the AI is also needed to go to the kind of the physical AI or hardware area.
Yeah.
So as a deep tech investor, so how do you think about the AI situation related to the deep tech area?
The way we look at it, the large language models that we are all familiar with have already read everything that was ever written. So there aren't enough new things being written to feed those data-hungry LLMs, right? So where is the data that they will start to absorb? That data isn't in written language form. It's actually in sensor data. It's in biometric data. It's in chemical data. It's in measurements off scientific experiments. It's off equipment. It's off factories. That's where the next 90% of the world's data is. And this means that we will have the world of physical AIs. I think most of the investing markets here understand this is coming, and they're correct. And we've been doing that. We have 6 or 7, we think, world-leading physical AI companies. We've just done another, it's not a physical AI, it's a pure AI, but we've done an AI for math. For super exotic and sophisticated math, and to make sure that AIs do not hallucinate when you are running a hedge fund and you're building your math on financial models on math, and they do not want that to be wrong, or it could take an entire country down, right? So if you can make sure that hedge funds models never hallucinate, you know, we did that company, right? So, but we are, again, that's this level math is extremely technical, and so to get it right was just another, we kind of fit our thesis. Okay. But I do believe that physical AI is coming, and we do have those companies in our portfolio.
How about your portfolio? How much portion is related to the AI now?
Yeah, so AI is, from our portfolio perspective, is, I'm just going to say, almost all of my companies would say, it's 100% Po, because we all use AI.
These days is right. Okay, I see.
Everywhere.
It's so hard, but then you say, okay, well, we don't mean that. Well, where's the line? It's sometimes hard to draw the line. So one way we draw the line is, are you selling your AI? Are you selling seat licenses? Or are you using your AI? And only you get to use it, and you make a product. So we believe, is the world's best drug design company in the world using AI. But people don't get to use it, only we get to use it. That's not what AI investors normally mean by AI. They mean like you sell seat licenses, right? A lot of markets, if you sold the seat license to it, there's probably only 200 people in the world smart enough to use that AI. So you couldn't sell the seats for very much, right? So you have to use the AI for yourself. So we have the best, we think we have the best AI company for drug design. We think we have the best AI company for crop genetics. You know, category after category, we have these things, but most of them actually, in some ways, are not what AI investors thought of as an AI company, because they weren't selling their AI. But it is shifting. I am seeing all these big AI funds understanding that there's enormous value in being the only one to use your AI.
Okay.
And we are seeing a lot of AI funds come into these physical AI companies.
Physical robotic area.
Yeah. And even though they don't sell their AI. But so I'm not trying to avoid the question. What percent of my companies would say that their AI is the main feature of their company? And that's actually a small portion of our portfolio.
Okay.
You know, it wasn't a big part of our historical portfolio. And it is right now probably with new companies, 20 or 30% of what we do. But historically, it was probably more like under 10%.
Actually, another question is that you mentioned that you got some good deal pipeline in the whole world, and then after that, the SOSV, they help them to develop the business thing, other things. As an accelerator, me also, always thinking about after finding out good technician, good researcher, PhD guys, but they don't know well about business area, how to make the company. So I always thinking that so how the KIH program going on? What kind of benefits do I have to give them? So how about SOSV? What is your feature, your kind of strengths to help them?
I think I'm going to say the answer is actually surprisingly easy. And there's two most important parts of it. First most important part is that you actually pair experienced business builders with the startup. So not just mentors, not just people with a casual opinion. On our team we have 6 partner level and above individuals. So 3 general partners and 3 partners. A startup every week is meeting not just with a partner, but with a general partner. No other accelerator in the world does it like that. They might have a 1 partner or general partner, and they have less experienced people talking to the startup. Here you are talking to people who are professional investment counselors who have built a lot of successful companies, and they have a lot of experience. So you're giving good advice to startups is just from the first place. The second most important dimension is that it's not, do you know the phrase cookie cutter? Cookie cutter. With this, you make a cookie. Everything is the same, right? All the cookies are the same shape. So when we do an accelerator model, we're making an early check. It's not just we teach a curriculum and it's the same for everybody. Our whole program is designed to help that. What does that startup need? And let's help that startup what they need.
Customize things?
It's 100% customized.
Okay.
Meaning our goal is to make that startup great. It is not to teach our program. And if you prioritize what are the needs of the company and understand that every company is unique, rather than trying to say, what can I teach everybody? We do a little of that, but like the goal is to drive alpha, to drive alpha financial returns, to drive alpha into your companies by giving it really good advice, and you help them build their company. I'll be very clear. Nobody wants to go to an accelerator anymore. Nobody. They want to work with real VCs who really know what they're doing, who give them really good advice to build their company. They don't want to hear about everyone else's company. They should. I wish they wished, because you'll learn a lot, right? And they always learn more from accelerators than they think. But they come in thinking, I don't need an accelerator. I want to just build my company, right? But they do it, and then they end up saying, hey, it was great, because they learned a lot, actually, right? So we have many examples of, we have another company right now where I'm picking up the company at this point. It's been Wesley's company so far. And they started out making construction particle board with enzymes. So they would take agricultural waste, and they would make, plywood, essentially. And it was a pretty good product. And Wesley steered them instead to make energy pellets. So all over the world, people are trying to replace coal with these wood pellets. He felt like we could make the best wood pellets in the world. Wes did such a good job that like we now think it's a world leader, and it's come to my desk now, and I'm taking it from here because I'm using one of our other funds to lead the round. You know, we're really proud of the fact that we bend and twist and coach our companies into using their technology in different markets that they hadn't seen.
Okay.
Even this one, they weren't doing fertilizers when I met them. You know, like that's their product, but they weren't doing that when I met them. They were doing something else.
Just R&D.
No, not R&D. They had a different kind of product.
Okay, just jumping to a little bit one more step about these questions. So this is a question about the phase for just before the growth stage. So usually we call it the 0 to 1 stage. And then lots of the artificial skills and everything is we need to put it into the our research there. Under this situation, when I describe accelerating or building on the business together means, this is from the VC's perspective, only two things we can helping out. That is meaningful for founders. Another one is not so much working flow. That is first one, following investment. So providing the capital continuously with the very strong convictions. Another part, maybe generating the revenue together. So that is kind of business development phase. So normally, because Silicon Valley or US investors and East Asian investor has a different history of VC or different history of accelerating, building the monetization together is very important part from the accelerating or VC or company builders and whatever how they call it. But from your description, so you much more focus on the kind of business development together part.
Yeah, I would say we need to get the business right, so then we can sell it. Right? You're raising a really good point, which is, you know, we often do this when we're recruiting a company. We'll be like, you know, well, who have you been trying to get a hold of? And they're like, for 6 months, we've been trying to get ahead of the innovation team at this global corporate. And I'm like, oh, let me text it. I text it, and I'm like, in 10 minutes, you're meeting with them tomorrow. Like, you know, we are a big fund. We have a lot of companies.
Yes.
We are global, and we built up a lot of trust over time. So we are on a first name basis with a lot of people who trust us. And so when we try to get our startup into a room, we have a pretty good chance of being able to do that. And that does speed up the business the scaling for sure.
But one more question about that, because I want to take lessons to my colleagues and investors in Asia. But when we look at the market share in global market from US typical or legacy company, comparing to the Asian company, now the manufacturing or some of plant company, and many companies business the market share is shifting from the US or Western to Asian now, and you guys are investing into the very tech-driven founders, and then you should also link to those founders to Asian market shares together. Otherwise, it's very hard to scale, making the scalability global-wise quickly. So isn't there any case that from your domestic founders linked to Asia or another country's market directly?
Yeah, I think it's an illusion that Silicon Valley represents America. Silicon Valley does not represent America. We represent global.
Oh yeah.
Right.
That's what I want to point out.
Every Asian fund has an office here. Every country of Asia has an office here. So does most of the world. They have an office here. So this is global capital centralized in a location called Silicon Valley. 58% of the world's venture capital gets spent right here. There's only 8 million people live here. So founders here have a much larger pool of capital than the rest of the world. The rest of the world splits up 42%, right? And the other 8 billion people split 42%, and the 8 million get 58%. And so it's global capital. When I say I connect people to global corporates, they are all over the world. And they may have an office here. They may not have an office. They may not have a headquarters. They may have an office here, but their headquarters somewhere. That doesn't matter. It's just a global network. 100%. We have companies, we build them in India first. We have companies we build in Singapore first, where you live, right? We have companies we build in Japan first. Like, we just look for like what's the best market in the world to build your company in, and we don't care what's and it may be best because the founders know that market, and that's just it. So it makes it a little bit easier, even if it's not the Thai kind of situation. So we aren't. I don't think it's fair to think of us, and we don't want people to think of us as we do the American market. But let's talk about what it does mean, especially for Korean companies.
Okay.
Because I think this is where it gets interesting, because Korean investors do have a different financial scheme, especially you have a ability to go public at $100 million that only a few places around the world have this.
Yeah,
it can create a shorter time window for investment dollars. But you're seeing also that a lot of Korean companies now financially need to tap into global capital.
Sure.
And as their cap tables shift to looking to go to global capital, they come here a lot because this is where you can get global money. It's not American money, it's just global money, right? And that global standard does look at cap tables differently than they are looked at in Korea. There are some subtle differences, subtle different styles of investors, and say it's becoming less common in Korea to take a board seat, for example, but it's becoming more common here to take a board seat. So there is a shift of a different, slightly different financial universe. It's kind of like going from, a lake to an ocean or something, right? And it's salty there now, but it's still water, right? And I think we are seeing a lot of Korean startups need to tap into global capital and need to know what that journey ahead is going to be like for them. And we are there for Korean companies to make that jump. We've done, Catherine, 28 Korean companies in our last 11 years together. We've moved companies. We're happy to bring them here and tap into global investor markets together. But you will have to make a little bit of an adjustment for what does it mean and what are people looking for here.
So you naturally move into the Korean thing. So reason why I came to San Francisco is I bring some 10 startups we invested to participate in TechCrunch, but not only participating in TechCrunch, but the most important reason is finding out the global money. Learn the global view. So moving to the Korean things, SOSV also has some relationship with Korea.
Very much so.
Also, our sister company, Korea Investment Partners, and then you guys fundraise from Korean government area.
Korean government. We have many other LPs in Korea.
So you already little mentioned about the Asian and Korean things. So what is your purpose of have a relationship with Korea? What kind of your strategy to invest in Korea?
We naturally, as I said, like even here in the San Francisco, as a global firm, SOSV has pulled from 90 different countries. So we're naturally picking up some Korean companies in that process, right? We decided to, you might say, double down on Korea because we felt like the investor markets were as rich in capital and diversity of thinking to actually launch global companies out of Korea. There are many markets that want to essentially have enough capital, have enough investors to be a really active market. We would actually say they fall short by that standard, but Korea has built that, and that is a really strong way to create success. You always want optionality. So in Korea, companies can stay in Korea and go on the Kosdaq, or they can come to America and go for a global outcome. Like that optionality is, again, a good for the investors, right? And then just naturally, because we're in deep tech, many of the world's leading corporations are out of Korea are really looking global now. And we are kind of working with them and doing with them. Many of them are our friends. Some of them are our LPs. And they are looking to grow and looking to have more global influence, and it aligns with what we can do together.
Okay.
As it comes to founders, we are really looking for, I mean, we do have a lot of experience with Korean founders, and we've had very good experience, so we feel, good about their coachability, feel very good about their ability to learn what they need to learn to make this global jump.
You already mentioned the Korean agri-tech company you invested. So any other Korean company you invested?
Yeah, well,
can you
I'm just going
introduce some?
let me just do one. Okay, so
yeah.
we just did a significant investment into the Series A of a company called Raga.
Raga.
RAWGA.
Okay.
It is a beauty brand that is also extremely deep tech, and they sell plant-based collagen products to the beauty sector. And they are a company that has 30 million in revenue right now, and we just at a Series A level, so revenue is exploding. And we were able to spot, I think, earlier than other investors, because they are a beauty brand, and so they look like any other not really scientific brand that wants to be scientific. They look like that. So a lot of Korean investors thought that's just an ordinary beauty products company. I'm like, no, this is no one in the world knows what they're doing. No one even can figure out what they're really doing except for us. And we did figure it out. And we indicated we were going to participate. We have two other great Korean investment funds in the company for the Series A that we were just part of.
Okay.
And we're super excited. I mean, the company's very profitable on that revenue, and again, it is very deep tech. It did this early work back in the years before this. Has an incredible founder who also invested in the company himself, and we feel like it's an incredible bargain. So be able to say in that category, to have that kind of revenue and that kind of profit.
So you mentioned the two startups, for the guys entrepreneurs, the Korean startups who want to really reach out, want to really meet the SOSV.
What is a good strategy?
How do you find out the kind of guys, or how they can find out you guys?
Just go to our website and email us. My email's on the website.
But I think you got hundreds of email things.
Well, I'll just say, first of all, we do think of us as, if you're doing something incredibly scientific and you have a hard time finding investors who can understand you, you're probably for us. I am pretty sure we can very quickly show you that we can understand what you're doing, and we can focus on how to help you. So that goes for whether you're just looking for an investor or even if you haven't thought about going after global capital, right? We can come into your company in the very early days, and when it's time later to go global, we can do that. And we're very patient in that sense. And we like energy transition, right? We like the important thing to know about us is we keep investing no matter what kind of market it is. We're going to do out of San Francisco about 20 companies a year, New York 20, New Jersey 20 to 30, every year. When COVID happened and everyone stopped investing, we kept investing. And a lot of those companies turned out to be great. So it's just, we're not trying to time markets as a fund. And as such, we're always open for business. And we're always looking for new companies. And so you can reach out to us directly, but I'd also say talk to our friends at KISC and they'll connect us, or let them see the deal too, and they'll show it to us, right? Like, we have a lot of partners and friends in Korea to reach out to as well. I just want you to know we really will fund things, and we do care.
So thank you for saying like that. So I really reason why I have making a good relationship with the SOSV is we want some Korean startups we invested, so helping them to really reach to the
Shifting the cap table first.
Yeah.
no, global market. So
Yeah.
I keep talking about with Catherine. So if it's possible, making some co-investing and accelerating program.
Yeah.
So next year.
Yeah.
So and then after this interview, we also have some event tonight.
Yeah.
And we bring some 10 Korean startup invested.
Yeah, that's great.
So I will try to keep making that kind of event or
Yeah.
the future, making some co-accelerating program together to helping the investing the Korean
Well,
startup.
we love what you guys do because, as you know, like with the TIPS program in
Yeah.
Korea, right? There are a lot of startups that are in accelerators where the accelerator hasn't really invested in their company yet. Not really,
Yeah,
right?
yeah.
They put time in, they care,
Yeah.
right? But it's not the same. And I think KIAC stands out in the Korean market
Yeah.
because you guys actually are investing in your top companies, and we appreciate it because that's much similar to our model. And we believe it just forces the investment team to be even that much more rigorous in selection. When people have to own their investments, like when I invested in this one, I didn't know if it was going to succeed. I had no idea.
Okay.
I had to take the risk, but you have to embody that risk, and it makes you a better investor. So, yeah, we love working with you guys.
Okay, sounds good.
Yeah.
I really hope to make a real our co-accelerating program.
Well,
in
let's
the next year.
not just do itty bitty startups. Let's build great companies.
Sure. 지금 이 영상을 보시는 한국 스타트업 분들, SOSV 그리고 저희 KIAC에 관심 가지신 분들 댓글로 뭐 만나고 싶어요, 뭐 회사에 대한 소개나 설명 달아주시면 저희가 한번 잘 판단해서 같이 미팅하면서 기회가 되면 우리 SOSV를 좀 소개시켜 드릴 수 있도록 저희 노력을 하도록 하겠습니다.
Since you invest in like 20 companies a year, I assume you have seen a lot of success and failures. It's a simple question. What's your biggest red flag when it comes to startups and business?
Our biggest red flag would be founders. This is going to sound paradoxical, but it'd be founders who really know what they're doing, and they're so convinced that they've got it right, and they really are sure they know how to do it. Now, sometimes that's the kind of founder that sometimes it does appeal to other investors. It feels like he or she, I don't need to give them my time. I don't need to give them my help because they're so confident in what they're doing. This is great, right? To me, it's just always a flag. I'm always looking for individuals who can co-create with others. What does that mean? The individual who is so sure he or she knows what they're doing often can't even work with the other people in senior management. They're too headstrong. Nobody can work with them. I can't work with them, but so their CSO can't work with them. Their COO can't work with them, right? You're looking for people who have ideas, who have drive, who just are constantly on the go, but one of the things they have to be really good at is collaboration. And so there is a Silicon Valley stereotype of this overconfident founder, and that's what you're supposed to back. We don't like it. We had one in here 2 weeks ago. He had a great product technology. He had a great product sector. Everything about it was great, except he was too confident. Too confident. And it was like, no, man, that's not what the world's like. In this real world, there is not a company that doesn't come around for its bruises. And it may not be in the early days. If you don't get it in the early days, you're going to get it in the later days. And you need to be a collaborator. You need to be able to work with other people to create value. I believe that the greatest value is created by groups of people, teams of people collaborating together. And I believe that the value that creates far exceeds anything where like a single individual, which I do believe that great value can be created by single individuals, but it's not as much as great teams.
You know, every time we finish, we have the signature greeting.
You're gonna teach it to me.
Signature greeting. 사랑해요, 한투.
한투.
한투, Korea investment.
Yeah.
If I say
구독, 좋아요. Yeah.
you 사랑해요 한투 한투.
The first part. 사랑해요.
사랑해요. I love you. 사랑해요.
사랑해요.
한투 한투.
Yeah, okay.
오케이. 정말 SOSV 모시기 힘든 우리 포 파트너님을 모셨고 정말 귀한 말씀 많이 들었습니다. 오늘은 포가 저희의 시그니처 인사를 하면서 마치도록 하겠습니다. 시작. 사랑해요. 한투 한투. 감사합니다.